What is relative strength index divergence? Hello, this is Igor from FX Igor YouTube channel, and today we will talk about a few basic lessons in the trading. So the first step that I want to show you is that my favorite indicator is the relative strength index. The relative strength index is a popular momentum oscillator since 1978, and the main rule that all traders know from the beginning is that RSI overbought level when the RSI is above 70 and oversold area when it's below 30. So the biggest issue here is the RSI formula. But I know that majority of traders do not want to analyze mathematical explanation about any kind of indicator. So in this video, I will just short tell you that the basic point of a relative strength index is to create an indicator that measure average gain divided with average loss and trying to put that relative strength from the 0 to the 100. So in that case, whenever asset you watch and analyze, you will always calculate price range from 0 to 100. And it will be much easier for you. What is the divergence? The divergence is when the price of an asset is moving in the opposite direction of the technical indicator, such as oscillator, or is moving contrary to other data. So it's a very simple thing. You have a chart, and on the chart you have a bullish or bearish trend. Below the chart you have an oscillator such as relative strength index or MACD, and that oscillator has its own trend. Usually oscillator and chart are going in the same direction. For example, chart is showing bullish trend, oscillator show bullish trend, and vice versa. However, when we have, for example, bullish trend on the chart and bearish trend on indicator, it is very interesting. Let me start from the beginning. For example, on this chart you see what are higher lows and higher highs. So we have a bullish trend. However, when we add an oscillator, the things starting to be different. For example, I will not use relative strength index, any kind of oscillator, like this, with a yellow line. You have a bearish trend. You have a bearish trend on the oscillator, and the bullish trend, this is some kind of pink line, on the chart. However, we see exhaustion of the trend, and after that, we have 900 pips bearish move. So, on the chart, sometimes you can see the different directions of the oscillator and the main chart bullish or bearish trend. In that case, it can be interesting because usually we can see the change in the trend. The same thing, like I said, is for MACD. This is another oscillator similar to a relative strength index. The same thing is there because if you see right now, you see that we have a divergence on the chart and on the oscillator, and then we have a breakout signal. So to summarize, we have a bearish and bullish move. We can have a regular or hidden divergence. What is the regular divergence? As you can see, if we have a, for example, bullish move on the main chart or bearish move on the oscillator, but the major trend on the end is going to be bearish, this is the regular bearish divergence. Okay, let me see the bullish divergence. For example, we have a bearish move on the main chart. We have a bullish trend on the oscillator, and after that we see the bullish move of the main chart. We have a bullish regular divergence. The hidden divergence is just the opposite thing. And for me, based on my analysis, the regular divergence shows the better result. When we talk about probabilities, you need to understand that trading is very tricky. Usually, without indicators, without any kind of economic fundamental analysis, you'll be 50-50%. If you use technical analysis and if you use fundamental analysis, you will be just about 50%, 54, 56, 58. This is it. So please always know one truth. If you're a real trader, trader. There is no 80%, 90%, 95% accurate indicators or strategies, something like that. No, it's always 50-50%. But using the analysis, technical analysis, fundamental analysis, we can increase a couple percents our probability. So when we risk $1 and try to achieve $1, we can have accuracy, for example, 52, 53, 4, 55, etc. So this is very important rule. I will repeat that in my channel very often. So when we watch the chart, we will see very rare, not so often, but when we see, usually this is some kind of a signal for breakout. Right now on the chart, you see the bearish trend on the oscillator, the black line, and the bullish trend on the main chart. And after that, after the regular divergence, we see the strong move on the downside. What is the very important thing? You don't need to trade the divergence all the time. Relative strength index you should use as a regular indicator, and you can draw the trend lines on relative strength index. Sometimes it's very good strategy is to make combination of the channels on the chart and relative strength index. For example, right now we're watching the Bitcoin chart. On the Bitcoin chart we have a bullish trend. That bullish trend is in the bullish channel. On the relative strength index we can see the bullish trend line. Excellent, everything is bullish. But we see that there is a probability that either we will see more bullish or more bearish trend. So what we can do? We can draw this trend line and wait to see, maybe on 4-hour chart or daily chart, to see the close below of this channel. After that, we can create a sell order and make some kind of trade that can be, like I said, 52, 55, 58, 56% on the bearish side. So the good thing is, using the technical analysis, sometimes using the channels, using the relative strength index, with all that combination, without the divergence, we can trade. So the advice is, if you use relative strength index, draw trend lines, analyze the market, try to see the fundamental facts right now on the market and all the stuff that you can bring, and try to make some smart decisions. And on the end, I will just show you the weekly chart. So you can use a relative strength index divergence on the weekly charts, on the monthly charts, long term. For example, you can see in the 2020, we had a bullish trend during the summer. But just before that, on the end of the spring, we started to see some bearish move. That bearish move accelerated. And in one moment, in October 2022, from the price of 1.2, we had 0.94. It was a huge drop in price, one of the hugest drop in the price in the last decade. And we can see that on the chart right now. So this bearish move on the relative strength index can be some kind of the signal, one of the signals that we can use in our trading. Of course, I just want to tell you that it's very important to know that you need to monitor all the facts and all the problems in the economy of European Union and US, and to add all that knowledge related to fundamental analysis to read this chart in the better way. For example, just right now, we can see that from the October 2022, we started to recover. And right now, the price is 1.08. So why is that? Because there was a huge intervention in the European Union as well in the Bank of England. And that October and November interventions that we had brings that euro and British pound recovered from very huge drop. So always try to use the technical analysis and fundamental analysis together, and in that way your chart will be much more interesting. Now, from this moment, we will try to create a several art for beginner traders, something basic, but because we want to put some basic knowledge of the Forex industry in our channel. So from today and next several days, we will try to create something like a short course, something very interesting for all our traders. So watch our channel and just monitor. during the February 2022, and I hope that you will enjoy. I wish you a great day and bye bye.